Hey guys, Stock Saturday and back to green, back on the right side. I'm up about 6.5% this week. Plus, I've added about £2,000 to the Interactive Brokers account, so I've excluded that from performance. And yeah, compared to the Nasdaq, that's not too bad, up 1.75%, and the S&P up 1.54%. So yeah, 6.5. Really happy. That's mostly clean spark and a little bit on the gold miners, a little bit of some stuff in here. We've had sort of Broadcom having a reasonably good week again, 8% up, and then sort of lots and lots of holdings up, sort of 2.5%. So slightly above the market. But yeah, let's have a look at some news. So it was FOMC meeting time this week for the Fed in the US, and sort of unsurprisingly, they left rates the same. I don't think there was anyone thinking they would raise rates, but it's sort of all about the meeting afterwards and the talk and the summary of economic projections that they put out. So they sort of give you this little table as to sort of what's changed since the December one, 3 months ago. And yeah, broadly, they seem very positive. They've put GDP for this year up from 1.4% growth to 2.1% growth, and slightly increased next year's and the year after. Keep longer run the same, but yeah, a sort of 50% increase basically in the GDP raise this year. They seem very positive. They've reduced unemployment to expected 4% from 4.1%. They've left ordinary PCE inflation flat, but they've raised core PCE, so still expecting presumably Labour to be having a greater effect on that, and they've slightly raised normal PCE on in 2025. So yeah, not a huge amount of change, to be honest. They have sort of raised their expectations for interest rates, Fed funds rate for next year. They've left sort of basically three cuts, 0.75% cuts priced in this year, but they've knocked one off for next year. So 3.9% expected. I'm not really sure why the market seemed to sort of take off on this news, but sort of almost immediately afterwards, everything started rocketing up. Maybe it is just the GDP projections, but you'd sort of think interest rates would have a bigger effect. Yeah, a little bit strange. Sort of come down to the charts. This is my favourite chart. The individual members and where they are. So end of 2024, they're sort of fairly well organised around this sort of 4.75% Fed funds rate. But next year, obviously, they disperse. They still have this sort of doom-monger right at the top, 5.5% rates. So basically unchanged rates from now at the end of next year. And then sort of cluster around 4%. And then, yeah, 2026 back down to 2.75, 3%, 3.25. Yeah, with the doom-monger at 5%. 5% in almost 3 years is a hell of a high rate. It does come down, I presume that's him or her, to 3.75%, is that? Or 4% basically. Yeah, so very, very odd. I won't go through all the sort of before and after graphs of how they get to those figures. You can have a look at those yourself. But the GDP one was interesting. They were sort of all in a fairly wide range. Some people were predicting rather low GDP for this year, and they've sort of all pretty much all shunted their expectations up. Some are in the sort of 2.5s, 2.6 to 2.7% even for one member. So expecting a huge growth year. Yeah, that basically provided sort of most of the gain for the week. It was on the Wednesday when they had their meeting. Nasdaq especially. That sort of shot up, and pretty much everything shot up. Gold, Bitcoin, sort of shot up, and yeah, had the little sort of pullback Thursday and Friday, but ended up positive. So interesting to see where this goes. So on to some earnings. We had Tencent's quarterly report, rather nice. Everything sort of looking fairly positive. Video accounts on their video streaming platform. Total user time spent more than doubled, which is pretty good. They're trying to push the streaming side. Mini games sort of doing pretty well. Gross receipts increased over 50%. Some decent games in China. Obviously, these are sort of quite a lot of free to play and yeah, sort of freemium games. International games as well is now 30% of games revenue. Double-digit growth, very nice. Tencent Music doing quite well, and Tencent Video both increasing average revenue per user. So that's good. It's not just it's not just sort of loss-making pointless users. So then their main revenue breakdown, they've had value-added services, as they call them, sort of social networks, domestic and international games. That's the largest sector. That is down 2% year on year, down 9% from last quarter. But yeah, not too bad, considering they've had sort of more crackdowns and all sorts over the last year. Online advertising, though, up 21% and up 16% on last quarter. So it really has come in the last quarter, that gain. Fintech and business services up 15%, up 4% on last quarter. They're offering money market funds and low risk investments and that sort of thing, which wouldn't really expect from a tech company, but yeah, rather unusual. I thought their sort of state-owned banking sector would be sort of more keen to be getting in on that. I suppose they own the underlying funds. And then others, it's a very, very small section, sort of down 26% on the year, up 75% on the quarter. Doesn't sort of make a huge difference. And then, yeah, operating profit up and net profit up 44% and 36% on for the full year. So very nice. Last year had some sort of non-cash adjustments and write-downs and that sort of thing. So it's maybe not sort of comparable, but yeah, it's good to see it. Good to see it doing well. They have to get their little slide in on AI. I think everyone is at the moment. They're not really doing all that much in AI, so I don't really focus on that too much. Returning capital to shareholders, so they're sort of highlighting their distribution in kind. They obviously own a lot of chunks of various companies, and rather than sort of sell them and pay a dividend, they have actually distributed the shares to people's accounts. So you got a small stake in someone else if that was something you're interested in keeping. And then, as with lots of Chinese companies at the moment, they are pushing dividends and buybacks. So they did 1.9 billion USD in dividend in 21, same in 22, and they raised that 50% in last year, and they're estimated to raise that to 4.1 billion. So it's what is that, 42% year on year. But the share buybacks, they sort of weren't really doing at all before. They did 4.3 billion in 22, 6.3 billion last year, and they're saying over 12.8 billion in buybacks. So while they're at sort of a relatively lower price to earnings ratio, that's pretty good. 12.8 billion will make quite a difference. So have to see what that does to the price. They have a little bit of highlight on their games as well. Domestic games. Some of these are sort of somewhat knockoffs of Western games and sort of varying quality, but they obviously do one of the best in China. So pretty good. International games. PUBG Mobile sort of still doing pretty well. Domestic and or daily active users and gross receipts increased year on year. So very nice. And Brawl Stars, sort of PvP battle game, sort of I believe a Smash Bros. Brawlhalla type game, doing really well. All-time high gross receipts. Yeah, online advertising doing very well. As we said, up 23% year on year, so pretty good. AI targeted ads as well. Got to keep getting AI in. And then just looking at their cash side, the total cash increased 26% year on year, slightly from last quarter as well. So that's good. They've always sort of run fairly lean, 403 billion renminbi versus 348 in total debt. But the debt's only up 4% year on year. So they're a little bit less lean. Finally, sort of a net cash position, which I don't mind if they're sort of spending the cash in acquiring sort of decent companies. But yeah, it's nice to see a little bit of net cash. And they also note that their fair value of shareholdings in listed companies is $78 billion and private companies is $48 billion. Obviously, they still don't give a breakdown. I'm always trying to find more of a breakdown in that. I think you can get the public companies sort of relatively easy, but the 48 billion is obviously much harder to get at. We know, some of it's Riot Games, some of it's Epic Games, and that sort of thing. But a nicer breakdown wouldn't be bad, like Process do. And then, yeah, share repurchases. They're sort of showing, 9.8 billion shares. Stock-based compensation issued 62 million, and they repurchased 101 million. So it's coming down overall. And then last year, 55 million in stock-based compensation and 141 million buybacks. So they're saying this year, presumably stock-based compensation won't change all that much, and repurchases should be over double that. So closing in on 300 million shares, which should be good. Just sticking with China as well, Baidu, obviously a much smaller holding, only a couple of thousand in the Interactive Brokers account, but yeah, they're not looking too bad. Revenue up from previous quarter and previous year, 6% up year on year, and then sort of profit figures all over the place again due to sort of various write-offs and bits and pieces last year. They've had sort of a bit of a write-off this year, so yeah, they do non-GAAP to sort of give you that more realistic figure, up 44% year on year, so not too bad. And they're sort of highlighting their bullish sectors, AI cloud, sort of growing reasonably well. The intelligent driving, though, is one I'm sort of really keeping a keen eye on. I always state people are, banging on that Tesla are 5 years ahead of everyone, and they've done 839,000 autonomous rides in the fourth quarter, which is up 49% year on year. And yeah, total accumulated rides since they started surpassed 5 million. So 840,000 of 5 million was in just the last quarter. So it's really ramping up quite a lot. And they've said in Wuhan, obviously a well-known town for various reasons, or city rather, so fully driverless autonomous was up 45%. So they still have a driver for some of these rides, just sort of watching over it and making sure it's okay. And yeah, in the third quarter that was 40% fully driverless. So yeah, you'd basically say 400,000, nearly 400,000 fully driverless rides in one quarter. So yeah, I really don't see how Tesla is, 5 years ahead of the competition. You've got similar things going on in Germany, I believe, on sort of specific roads. If you want to make specific journeys, you can go fully driverless, I think, with Mercedes and sort of various companies. So it's worldwide. And then I always have a look at the balance sheet because that's a huge part of Baidu's market cap. You've got what, $35 billion market cap. They have currently 3.5 billion in cash. That's down from last year, but it looks like they've been putting it into short-term investments, presumably to get yield because everything's up. So, yeah, the $23.7 billion in treasuries or sort of, government bonds, presumably short-term government bonds. That's dramatically up from last year. So that's pretty good. And overall, total current assets up, what is that, about nearly 10%. And you have a load of sort of non-current investment assets as well, long-term time deposits and held-to-maturity investments and that sort of thing. They count as that would basically be cash that they can't touch, but I would say could be partially deducted off the market cap. So, yeah, that provides a nice little bit of value in there as well. And just looking at debt, they've got convertible senior notes has come down quite a lot in the last year. Notes payable, so total debt relatively low. On the non-current side as well. Yeah, you're looking at sort of 60, 70 billions worth of, or 70 billion renminbi's worth of total debt in various forms, compared to sort of, pushing 200 billion in cash in various forms and sort of longer term treasuries. So rather a lot. You can sort of knock off, about 100 billion renminbi off a 277 billion renminbi market cap. So always worth considering. So just a quick look at the economic news. We covered some of this in the FOMC meeting, but we had EU inflation, sort of more of a confirmation of the provisional figures that they gave out before, as expected, and it is pretty low, to be honest, 3.1% core inflation. We had UK inflation as well, core CPI year on year, even more down than they were expecting, 4.5% on the year, and 0.6% on the month, and headline was down to 3.4% on the year. So, yeah, very good. Homeowners sort of equivalent one down to 3.8%. But this didn't make them interested in cutting rates. That was 8-1 in favour of unchanged. Again, I don't think anyone was expecting them to do anything with rates. One person voting for a cut, but yeah, and their forecast isn't sort of nearly as important as the US one. So yeah, the US had theirs, and jobless claims sort of looking pretty good as well. Existing home sales in the US up from last month and quite a bit up from expectations, so that was good for them. And retail sales in the UK sort of slightly better than expected, although fairly poor. Core retail sales down 0.5% from last year. Not sure why last year would have been particularly good. I thought, things were supposed to be getting better. So that is the portfolio for the week. Not too much else in here. Sort of mentioned we've had the rise in CleanSparks up about 12% for the week. Still sort of very, very volatile. It's doing quite well considering Bitcoin is down. Maybe it sort of led the market down, and then they're looking forward. Gold and silver miners sort of rose about 1 to 2% this week. Gold sort of hit another all-time high off the back of the FOMC meeting and sort of has dropped back slightly, but it's still $2,170, so pretty good. Can't complain at that. And REITs sort of not really going anywhere. Riot Platforms is in the red, so I am sort of watching the some of the REITs as to if we maybe get a little bit more of a spike down in the crypto miners. I could consider buying a little bit more Riot Platforms. Sort of was, of course, considering Riot potentially being a bit better value than CleanSpark, and maybe switching some CleanSpark into Riot Platforms for this sort of bullish next year ahead. I might be able to do a video comparing the two on Monday. So see how things go. And then on the ISA side, Pan American and KGHM barely moved. KGHM still doing pretty well. Hopefully, if we get this continued silver rise, that'll do rather well. And yeah, I put £2,000 into the option side on Interactive Brokers. Haven't sort of spent any of that just yet. Everything's sort of looking a little bit high. I think pretty much everything I would be averaging up on if I were to buy, but it doesn't necessarily mean it's a bad buy. You know, if I think I can potentially get sort of 15x on some of these in a very bullish gold and silver scenario, for example, then if they're now at sort of 10x, it's still 10x. So yeah, it doesn't make it a bad buy if it's going to play out that way. I think Himax is the only one that is below my average price, even though it's sort of showing in the green. Yeah, I think that would be sort of a reasonable buy, but it is quite a large position now, and obviously China is still quite uncertain. So we'll see. I might look at some new companies potentially, or sort of just hold off a bit and see if we get a bit of a crash in something. So yeah, leave your thoughts in the comments below and like and subscribe. See you soon.